I've recently taken up a small position in High Tide Inc. High Tide, you might be asking, why is somebody that calls himself a value investor buying into a small cap Canadian cannabis stock? Well, first and foremost, I consider myself to be a reasonable and rational person. So, starting from there, if I can be convinced that something is reasonable and rational, I am at least going to be inclined to consider it. This is what happened with High Tide. So I had a long conversation on our live show, Cashflow Kings Live, link in the description, regarding this particular stock. After that conversation, I peeked at the financials. They were good enough for me to start accumulating a little bit, listen to their last earnings call and what their CEO says, and that caused me to buy a little bit more. So first and foremost, this is a growth story, though you'll see that the last couple quarters, the growth has slowed down a little bit. The CEO has specified that they slowed down growth essentially to prove that they could generate positive free cash flow, and they have managed to do that. So in order to do that, though, they had to slow down on, for example, opening of new retail locations, because there is a significant amount of expense involved in opening up new locations. As a result of this strategic move, they have produced multiple quarters in a row now of positive free cash flow within the business, and thus proves that I think that their business doesn't necessarily have to burn cash, which means they can indeed preserve and generate value for shareholders over the long run. So, more important even than the free cash flow number itself is how much are we paying for that free cash flow. And in this case, at current prices, we're paying about 8.5 to 9 times that trailing 12 months of free cash flow, which, if you think about it, in terms of larger cap companies, you rarely see multiples this low unless there's some serious headwinds or extremely little growth, if any growth at all. Whereas this is a smaller cap company that I could see doubling or tripling this free cash flow number over a period of a few years without too much trouble. The growth of that free cash flow, of course, is an important part of how I'm valuing this stock. In their latest investor presentation, they talk about the fact that they've been generating this free cash flow and that their plan going forward is to reaccelerate growth somewhat while remaining free cash flow positive. This means they want to, of course, put the gas a little bit more onto growth, but not to such a level that it's unsustainable and causes them to have to burn cash every quarter. On the latest earnings call that I listened to, the CEO sort of outlined that in any individual quarter, free cash flow might bounce up and down a bit, but on the whole, they would expect it to be quarter to quarter positive. Though some quarters it might be a nickel, others it might be 10 cents. It sort of just depends where those expenses land. Now, another point for how they could increase their cash flows going forward is through acquisitions. Now, a CEO's sort of philosophy on mergers and acquisitions is probably one of the most important things that you can look at. Is this a CEO that's a busybody that's just going to make acquisitions for the sake of just growing top line revenue at any cost? The answer in the case of Raj Grover is no. With regard to acquisitions, their target criteria are complementary to the existing ecosystem and immediately accretive to earnings. This means they're going after brands that are already going to produce something towards the bottom line. On recent earnings call, I heard Raj sort of describe one of these acquisitions to an analyst who asked a question. Basically, they made a small, relative to their size, acquisition, but it was a brand that they felt they could plug into their own ecosystem that was already, going to be somewhat profitable, although to a small degree, and grow that revenue stream by plugging it into their ecosystem and driving efficiencies and scale to that smaller brand. All that being said, just because I've been convinced doesn't necessarily mean you should get in. One of the sort of double-edged swords with regards to small cap companies like this is a very limited amount of analyst coverage and coverage in general. There aren't as many eyes on this stock, so there's going to be potentially more unknowns out there. On the one hand, this creates more potential for inefficiency. This means you're more likely to find a stock in this range of market cap that's actually cheap relative to its potential than if you're looking at, say, the Magnificent Seven, where they have the most amount of analyst coverage and moment to moment almost anything is priced in. A stock like this, well, this analyst forecast is only based on one analyst. So there's only one official opinion, at least through this data feed, to look at. There are, of course, a lot of freelancers, a lot of individual YouTubers, Twitter personalities, etc., who have looked at this stock and who like it. Stocks in this end of the market cap spectrum, quite small for a publicly traded company, tend to have the potential to be a lot more volatile than much larger market caps. For example, I would think High Tide could have the potential to move a lot more price-wise in one day or 1 week on average than, say, something like Apple or Microsoft. On the one hand, if that's because things are going extremely well, hey, that works out really well for you. If, on the other hand, it's because, hey, something went wrong, or perhaps there's some kind of a negative perception about the cannabis industry, or something causes a big sell-off, some kind of fear or something like that, some emotional thing, even if it's not regarding the specifics of the business, you would still end up having to endure that volatility and deal with it, right? So it's not for everybody. It's just simply not for everybody. But for me, at this point in time, I see where it could potentially go. And for me, I'm right sizing the position, I think, for the risk. And I'm also personally no stranger to volatility. So the price moving up and down isn't really going to bother me at all. So that's the reason I'm able to be in this, as well as everything else I described previously about their financial situation, about their CEO, etc. Be sure you leave a comment below if you see any potential in this stock, or if you hold a position in it, or let me know if it's just not for you, if you're avoiding it, and your reasoning why. Be sure to hit subscribe if you want to catch more videos like this on investments I'm looking at. Also, be sure you like the video for the algorithm. Catch me every Saturday, 8 p.m. Eastern on Cashflow Kings Live, where we first discussed this stock before I even considered it. Also, make sure you follow me on Discord, link in the description, and on Twitter at Mr. Machamwog, link in the description there too. I know, big surprise. Take it easy, everyone. Have a wonderful day.